Good afternoon, everyone. Welcome to the webinar. We're going to get started in just a moment. Okay, let's get started here. Good afternoon, everyone. Welcome to the webinar today. I am Lauren Cooper. I lead the Forest Carbon and Climate program at Michigan State University, and I'm very pleased to be hosting the second session of the 2020-2021 Learning Exchange Series for the Forest Climate Working Group. We are really pleased to continue to support the Learning Exchange Series with the Forest Climate Working Group, and if you're not familiar, the FCWG is a diverse group of forest interests with over 50 members now, including landowners, industry actors, conservation NGOs, academia, and those active with carbon markets. The group has worked together for more than a decade to advocate for state and federal policies that work to ensure sustainable forest use and prevention of land use change. And you can see here our full lineup. And so we're encourage you to sign up for any future sessions that seem of interest to you. But to get to today's speakers, I'd like to introduce Mike Smith, a managing partner of RenewWest, and Chandler Van Voorhis, co-founder and managing partner of GreenTrees LLC. They will give a presentation titled American Carbon Reforestation, the Need, the Challenges, and the Opportunities. So today's session will be focusing on the potential for large-scale reforestation projects with carbon benefits as a business investment. Our speakers will explore large-scale reforestation projects, including risks of mortality and market opportunities, and identifying financial approaches to scale reforestation as a carbon removal technology. Excuse me, before I hand it over to our speakers, I'm going to do a little bit of housekeeping here. We're very excited to let them get going, but a couple of brief background details. If you're interested in receiving registration details and information about upcoming webinars, please email forestc@msu.edu to join our mailing list. A quick note that the session is being recorded and will be posted to the web along with any supplemental resources, including presentation slides with permission from the speakers today. And this happens in about a week or so. So if you've registered, you'll receive an email letting you know when that is and where to find it. And also a note that all of our previous sessions are available and their supplemental materials as well. So we have a lot of great resources from previous sessions on our website. The session will be followed by a Q&A on your Zoom interface, which can kind of disappear on you a little bit sometimes, so you might need to hover your pointer around. You'll see the word chat and a little drop-down triangle next to it. Here you can offer up questions at any point during the presentation. There's also a kind of a Q&A option as well. We'll keep an eye on both of them, so feel free to submit your questions at any point, and we really do encourage you to feel free to put in questions during the presentations so that you don't forget, and we'll certainly ask some clarifying questions and probably some bigger picture questions as well at the end. If you are joining with audio only or joining by phone, but you have access to email, you can also send any questions that pop up directly to forestc@msu.edu, and we'll be sure to put your questions into our tracking system here. We're usually getting some really strong audiences now with really great questions, so we will likely have outstanding questions, and we will put these together in a document and get some follow-up responses from our speakers and post those with the recording when we do that to the website. So in the case of outstanding questions, which is likely, we will have to follow up with our speakers afterwards. A quick note that if you are interested in continuing education credits, attendees today are qualified to receive 1 CFE credit from SAF. So if this is relevant to you, email addresses will be communicated to SAF. So if you're a member and you signed up with your account that's linked to SAF, you'll receive credit. This will be happen automatically. If you have any questions, though, feel free to reach out to us at forestsc@msu.edu. Furthermore, attendees are eligible to receive 1 CEU credit from ISA in either management, certified arborist, or municipal specialist category. If you'd like to receive ISA credits, please reach out to us, though, at forestsc@msu.edu so we can share the event code with you. And so with that, I'm going to let our speakers hand off between them today. So I will be back for the Q&A. But with that, Mike, will you please share your screen and begin today's presentation? Thank you.
Sure, absolutely. So as we get into sharing our screen here, just a quick introduction about myself. My name is Mike Smith. I'm the managing partner for RenewWest. With my partner, John Cleland, we're the developing and the team that we lead here at RenewWest. We're the developing company for the largest single site carbon reforestation project in US history, the Collins Modoc project, which is about 2 million trees in Northern California. And we're really proud of that. I'll walk you through a little bit. As the name of the company implies, RenewWest, we are fairly focused on the Western United States. So in the presentations here, I'm going to talk to a little bit of the opportunities around reforestation from carbon market perspectives, from climate perspectives, et cetera. And then Chandler is going to talk to some of the challenges associated with it, and he'll also be able to give more of an Eastern focus. So we'll go on that. So as we see on our screen here, there's quite a few challenges to Western forests there, as we all know: disease, fire, and climate change. And they all kind of feed into one another, as we've been seeing here in Colorado. Not quite as much news this year in Colorado as California, but it's our worst fire year ever. And a lot of that was because there was fire burning in high intensity through barely recovering forests that had been affected by disease. And that's affected by warming climate. So they're all interacting with one another, and I think we all know that. To give you a scope of how big that is, over 8.5 million acres have burned in the United States. That's this year. That's primarily in the Western United States. And for scale, 8.5 million acres would be larger than any one of these states that we see here. A little state map here that's not blue or red for kind of a post-election thing, but you don't want to be having that volume there. Now, reforestation is part of a broader concept of natural climate solutions. And the two papers that are kind of underpinning a lot of this was one that was published in the Proceedings of the National Academy of Sciences, Griscom et al. And it talked about that natural climate solutions on a global scale can be about 20% of the pathway to our climate future. So we still have to do a lot of fossil fuel mitigation work there, but that if ramping up natural climate solutions across the globe could be a big deal. And when we look at like all the options for natural climate solutions, the biggest one by far is reforestation, to the point that it actually kind of breaks the scale, as you can see there. Moving to the United States, Fargione et al. Published in Science Advances, talks about natural climate solutions opportunities for the United States. And again, when we look at this, the top dog there is, again, reforestation. So there's a lot of opportunities associated with that from a climate perspective. And it's an essential pathway to our climate future, no matter what we do. Now, when we talk about using natural climate solutions as a opportunity for achieving these outcomes, somebody has to kind of pay for that work. And you think about like all the different carbon pricing mechanisms that are around the world, it turns into, there's 57 different systems across the planet. Tax structures, carbon markets, and you can dive into the specifics of each of these markets as much as you'd like. But at a certain point, carbon taxes and carbon markets start to get a little fuzzy for the differentiation. Some markets, some taxes allow for offset structures. Most notably here in North America is the WCI. The WCI is an alignment between California and Quebec. For a brief bit there, Ontario was looking like they were going to join, and then they had a political change there that decided that they were going to back out of it. And now these pricing scenarios are based on some pre-COVID outcomes, and so there's been some depression to this, but it also has shown a great deal of resilience. One of the things that's neat about the WCI is that it has a price floor that goes up by 5% plus inflation every year. And so that price floor creates an allowance structure, and those allowances are an opportunity for companies that are covered by the WCI compliance obligations to go out and buy a license to pollute up to a certain percentage, or up to a certain amount. And the standard unit of measurement is tons of carbon dioxide equivalent within carbon markets, so, or TCO2e, as you see in the top left corner there. So in a price per TCO2e for allowances, it goes up every year. And that's a nice thing from a kind of a risk mindset for longer term investors. And one of the challenges, and we'll talk about this for reforestation in the long term, is about how you need to have a longer term mindset towards reforestation. This is not a quick in and out project type. Now, when you look at the different price scenarios for allowances going from here, it's fairly close to the price floor, but they do climb. And so exceeding 5% over the 5% floor over inflation. Now, allowances are that permission to pollute from the government, but offsets are a substitute for that. And there's only 6 different methodologies that qualify for the WCI, of which one is forestry and one subtype of that is reforestation. For those that are familiar with forestry and carbon markets, predominantly it's been improved forest management that's been operating in that space, but there are some longer term challenges to how much IFM will be able to participate in that space. From a climate perspective, the need for reforestation still continues, especially as we see our bad fire years continuing. The other component here of the price scenario there for the WCI is that there's essentially a price ceiling there, also going up by about 5% over inflation. And that's kind of a way to reduce some of the volatility for the markets in that space. Now, historically, what we're showing here is in a price allowance mindset is those price projections. And historically, offsets have traded at about a 20% discount to those allowances on the WCI marketplace. That has shown some evidence of tightening due to kind of a chronic undersupply of offsets and to the fact that as prices go up, it's probably not going to be a fixed percentage, but a fixed dollar amount. And maybe not all that fixed at that discount between allowances and offsets. And there kind of has to be, to a certain extent, that price differentiation, because otherwise people would just buy allowances unless there was just an absolute shortage of allowances. So something to think about there, but there's a lot of risk controls built into those that are interested in operating in the ARB marketplace. Now, one thing to point out for the ARB market is that there is some risk for offset purchasers here, and that's a risk of invalidation. And so the first thing that has to happen here is that when an offset purchaser buys an offset, they are buying the idea that it can be invalidated later on. And this is based upon some of the historical problems with some shady players within the carbon offset market. And so as a result, the state of California in AB 32, when they created the scoping around it, was that they said that an offset that's issued can be invalidated after it's been issued for up to 8 years. And so as a result, any purchaser of that may have to go out and, if an offset is invalidated, go out and buy another one. Alternatively, if a project goes through a second verification, that is a third party comes out and audits the issuance, if they go through a second verification, that invalidation risk is reduced to 3 years. And so in the marketplace, you'll see those referred to as CCO8s, or for invalidated up to 8 years, CCO3s invalidated up to 3 years. And then sometimes you'll even see CCO Goldens. And so those will be frequently CCO3s that have received some sort of secondary market insurance associated with that. So lots of concerns around that. In reality, in the marketplace, you're starting to see, you're seeing a lot of the offset buyers are trying to force that risk of invalidation back onto the project developers. And so it gets a little bit fuzzier between the definitions of CCO8, 3, and Golden. Now, when you look at offset market players, it kind of breaks down into 3 big tranches of players. The first one are project developers. And project developers have to go through those steps there of finding getting the project idea designing it, getting it validated by the third party, end up, in the case of reforestation, they have to let the trees grow, and then after they've grown for a certain period of bit, they have to come and get verified by a third party as well, and then it's issued. And that issuance process takes time as well. So project developers in the space include RenewWest. Our Collins project is focusing currently on the ARB marketplace. GreenTrees, which is Chandler's company and is focusing primarily on the voluntary space. There are other players here: Finite Carbon, New Forest, etc. So there are a few in the place. Once a project developer has developed those offsets, they have to bring them to market. And as you can kind of see on the left-hand side there, they can either take that directly to market themselves, or they can operate through brokers or retailers. Those brokers and retailers help to facilitate the transactions. Mainly the difference is whether they take possession of it or they just facilitate the transaction. Players in that space include BGC, 3 Degrees, and they've been around for a while there. And then finally, within the compliance marketplace, looks like we had a bit of a crash here, pardon me. Oh, I clicked on BGC's link. So finally, in the marketplace, you also you have the ultimate purchaser of those offsets. And in the compliance market, it's pretty much who you'd expect: ExxonMobil, Cemex, Shell, PG&E. The AB 32 requires that any entity within the state of California that emits 25,000 tons or more per year is required to participate. And so that includes fuel distributors, that includes energy providers in a lot of ways. It's worth noting that that's about 75 to 80% of the emissions of the entire state. So it's a big marketplace. Depending on how you value the allowances and the offsets combined, it's somewhere around $12 billion a year. However, the compliance market's not the only market here. And what's been interesting is to kind of watch the transition as people have gotten more and more excited about the voluntary market. So the compliance market was created by law. It has allowances. The players have to participate by law. And then some compliance markets have offsets. But in the voluntary market, there is no obligation legally. There is no allowances because there is not this government created market, but there are offsets. So voluntary market players, and this is an old list, but there's some big ones, include companies like FedEx, Barclays. Microsoft has said that they're going to be carbon negative for their entire existence, which means that they are going to not only scale down their emissions as they go here, but they're going to have to offset them as they go and offset all the emissions of the historical operations of the company. That's a pretty big deal as they get into that. So, just highlighting a few players here, but there's a lot and it's growing. And this is becoming increasingly an obligation, a self-imposed obligation by Fortune 500 companies. And this, within the marketplace, you're starting to see those self-imposed obligations moving lower and lower. Historically, voluntary market players have focused on Scope 1 and Scope 2 emissions. But in the case of Microsoft and others, they're actually starting to really focus on Scope 3 emissions as well. And that's a pretty big deal. And so what are some of the things that are driving the voluntary market? The first one is CORSIA, or the Carbon Offsetting and Reduction Scheme for International Aviation. It is a quasi-governmental obligation to participate in a voluntary market. And to put that in other ways is that every signatory country to the International Civil Aviation Organization, which is most of them, all their flag airlines are required to participate in CORSIA. It's kind of fuzzy how that goes as far as like your initial voluntary participation and where the baselines are going to be. A lot of that's being complicated by COVID because baselines were supposed to be set in 2020, but airlines right now are really low emissions, and so now they're pushing to have it be set as a 2019, so they have a relatively high baseline. But the long story short is that it's a big market demand signal being sent out there. Somewhere in the ballpark of about 7 billion tons will be required to meet that obligation between 2027 and 2040. And that would dwarf anything that's happened on the California compliance market. So that's a big driver. We've already talked a little bit about corporate social responsibility. Millennials believe in climate change at a rate of about 85%, according to Pew Research, and they're starting to vote and to purchase accordingly. Gen Z, it's approaching 100%. They really care about it, and Gen Z is becoming they're young adults now. They're no longer children, and so their purchasing power will only increase. And so you're seeing that concern happening across the general public. And then the other part of it is that some of the effects of climate change are just becoming increasingly undeniable. State and local government has kind of had some fits and starts, but they continue to try to push, and that's where during the current federal administration, a lot of the activity has been happening. So shown here is the Oregon State House. They've charged at the Hill twice as far as creating a carbon market, and have been kind of rebuffed by some political machinations, but the interest is still there. Happening in Washington State, happening RGGI, the Regional Greenhouse Gas Initiative, has expanded its presence on the East Coast. And so you're starting to see that happening. You're seeing, as unfortunately today is the day that the United States officially pulls out of the Paris Climate Accords. But there is a collection of states called the U.S. Climate Alliance that has decided that they're going to try to keep pushing forward on that at a state level. And so both Chandler and I are advisors to those groups as well. Now, when you look at project sites across the United States, this map or this picture here being near and dear to my heart, showing forests across the Western United States, it becomes a little bit fractured, and it's worth understanding how these project sites become limited. So the first one is that there's, in the Western United States, the federal government is where a lot of these lands are burning. RenewWest is a partner with the U.S. Forest Service, and we're proud of that partnership. And the Forest Service has some big needs. 1.3 million acres in immediate need of reforestation, another 7.5 million or 7.5 million in total that have been identified for reforestation. That's a big chunk, and that's areas that are not naturally recovering. You look at, however, the problem, some of the issues with the federal government is that they don't have an explicit authorization for carbon market participation. And they view that as the Office of General Counsel views that as a transfer of property right. And so there's some issues that are going to have to be worked out there on the federal level before carbon markets can directly interact in the production of offsets. There is a lot of room there for maybe some more practice-based approaches where corporate entities can invest in reforestation directly and to take credit for that. And we're developing some projects in that space. Outside of the federal government lands, you have some big industrial timberlands, and we were fortunate to be able to work with Collins on theirs. And then you have a lot of small timber landowners, and that's one of the things that Chandler's done a really great job of working with, and has been working on that. You also see kind of a parallel effort as far as that goes with TNC and the American Forest Foundation developing a carbon methodology for small landowners. And so we think that there's a lot of promise there. And a lot of what's available to be worked on is going to be based upon the prices of carbon at the time. And so as carbon continues to rise in price, that'll occur. It's worth pointing out, actually, and I forgot to mention that the voluntary market, though there isn't a compliance obligation associated with it, the prices there, because of CORSIA and because of this increasing CSR demand, have been quite buoyed to the point that they are in many ways beating the compliance market prices. In the compliance market, the prices are essentially just a commodity. It doesn't really matter where it comes from. It just matters if it scratches the compliance obligation itch. But in the voluntary market, different projects have different price points based upon the underlying need for the voluntary market. So that compliance obligation, or excuse me, that voluntary players are in this for largely marketing and branding strategies. And so if they can find projects that are close to headquarters or close to consumers, that gets a little bit of a point. So there's a premium in the US market for US based projects. If it tells a compelling story, then that helps as well. So projects that are on Native American lands, for example, might command a premium. Reforestation is particularly attractive. That would command a premium. Methane digesters for abandoned coal mines, maybe not as much. So just something to think about there. Finally, back to project sites. One of the things to think about here is the Council of Western State Foresters. We're a partner with them as well. There's quite a few federal or state public lands that are available based upon how Western states were created. And so we've been able to explore some project sites there, and we have some opportunities that are pretty exciting in that space as well. So any state level partners, I'd love to talk to you. One of the things to think about between these markets is that there's probably a carbon project available wherever you're at, is one of the things. And the trick is not to have your assumptions rule it out, but to actually talk to somebody that knows what they're doing and to find the right tool for the job. So there's that. Now, focusing on just kind of the nuts and bolts of how a reforestation project works for offset production, it's a volume game, just like timber. So a couple of graphs I'm going to show you here. This one here is MBF, or thousands of board feet per acre, I should say here. And I gave 3 different forest types: Rocky Mountain ponderosa, loblolly pine in the southeast, and northern jack pine. And these are just example, plots. They're not meant to be, descriptive of everything. They're much higher producing and much lower producing. You'll notice that site selection is going to be important from a carbon perspective. So speaking of the carbon perspective, moving over to that, you can see that the curves for TCO2e are similar, but not quite the same. And that's because certain things count for TCO2e that don't count for MBF, branches, small trees, etc. And that's worth noting. But when you look at that and you see the growth rates, it's a little bit easier for like a northern jack or a loblolly to develop a carbon project on something like that. If you're looking at like a low productive site, like low productivity site like Rocky Mountain ponderosa, you might have to find some ride-along capital there to help get the project off the ground. Now, when you focus on just the first 20 years there, from an MBF perspective, you see that actually in the first 5 years, like it's 0 again, and that's just because you just have really small trees. They don't really particularly count all that much. And then they come off. In the case of ponderosa, they may not get up to an MBF standard at all until 15 years or further out. But what's really interesting from a carbon perspective is that even in the lowly ponderosa, it comes off the peg there right from the jump. And that there is some sort of volume generation there that you can use for carbon valuation. And so that becomes pretty interesting, is to think about those first years. Now, to give you an example of a project site that we evaluated here, these were 3 different growth curves depending upon variabilities as far as success of the replanting, natural water sources, et cetera, for restoration there. And the project site there, it's an industrial timber site, had a pre-commercial thinning that they would like to do around year 10. They had a commercial thinning that they would like to do around year 35. And in their site there, they like to do a harvest somewhere between year 70 and 80. And when you think about traditional timber valuations, you have growth, and you have to do a pricing based upon accrual, or value based upon accrual of that growth for 7 decades. And you only essentially have one liquidation event of the actual asset itself at that volume, or that harvest at year 70. So what we talked about with this particular landowner is that they could have they do a selective harvest. If they were FSC certified, they were going to have to leave a certain amount of volume on the ground itself anyways. And when they do that certain amount of volume on the ground, that means that their harvest volume is a little bit lower at that liquidation event. But it also leaves an opportunity for that first 30 years that there's volume that they'll never recover on the timber sale, but that they'll also be essentially kind of growing for free for 30 years. That is an opportunity for carbon. To give you an example of what that would look like, this is that same project site, the conservative growth curve, looked at over the first 30 years and kind of brought forward. This was in total for the project, not per acre, as you see on the TCO2E. Now, when you produce those projects, the first thing that happens there is that the registry that you operate under, they shave a percentage of it right off the top. And that percentage is associated with creating kind of a common insurance risk pool for all projects. As we've seen, fire can come through and burn project sites up. We did have a fairly large IFM reversal that happened this year in California. And so all projects have to overproduce, and then that's used as an insurance pool against, so that the way that the climate is always made whole. So we can only sell to that lower curve. But the other part of the economics here is that you get to take little slices of the production over the years. In this example, we're doing a verification every 4 years, and that means that we would be able to bring offsets every 4 years. And that just changes the risk profile associated with the investment, which is rather than having one big liquidation event 70 years later, you get to take little chunks out as you go, and then you get to still maintain it as a timber asset for the longer term. That produces real value. When you marry up those little slices with an increasing price of carbon, you get to see a lot of value generated with that. So, it's worth thinking about that. Now, how often you do your verification depends upon the site productivity, depends upon the verification costs, which can range from tens to hundreds of thousands of dollars. So you need to make sure that you're planning out for that. You also need to make sure that you're planning out for management obligations. So the pre-commercial thin, you need to plan maybe a verification just before that, maybe 6 years after that, for example, in order to let the volume recover as you look at there. So there's just a lot of kind of dynamics associated with that, and it's worth talking to somebody that has been down this road before. So speaking of been down this road before, this is my last slide. And I'm going to go ahead and hand it over to Chandler here in a moment, who's the OG of carbon reforestation. Chandler, I think, got started back in 2003 with GreenTrees. He planted, his company has planted, the last time I checked, Chandler, and correct me if I'm wrong, 40 million trees, over 130,000 acres. His model's a little bit different, but it's a lot of similarities as well. And Chandler is, he knows a lot about this stuff. So I'm really pleased to have known him for a while. I'm happy to count Chandler as a friend. And with that, I'll hand him over.
Great, thanks, Mike. Appreciate that. Let me see if I can't select. Just bear with me for a second. Grab my slide up here. All right. Can everybody see that slide?
Not yet, Chandler.
All right, hold on. Let me just share screen. All right. So Mike, yeah, obviously Mike and the whole RenewWest team is doing a fantastic job. Every area presents itself with unique conditions that has to be adapted, but there's some common principles, and hats off to the great work that they're doing. As the topic of this webinar, I'm going to look at some of the needs, the challenges, and the opportunities. First, for those that are not familiar about ourselves, I'll give a little quick background on GreenTrees. I've been involved in the carbon markets actually going back to 1996. My business partner and I were looking at carbon reforestation through utility and power tree carbon companies from 1996 on, and then started our company in 2003. We have several different brands. ACRE is the management company. We operate a nursery in Big River. Forest Green is a consumer site. GreenTrees is what I'm going to talk about today. And then Conservation Plus is a portfolio management company that deals with improved forest management, wetland stream mitigation, nutrient mitigation, conservation easements. A little snapshot on GreenTrees. We're completely voluntary, and there's a good reason for that. Through the American Carbon Registry, we're actually founding members of that. We're focused in on what's called programmatic aggregation, meaning we're planting trees every year, we're adding new lands, and so our project continues to grow. We just have staggered start dates. 130,000 acres have been reforested with 600 parcels ranging from 7 acres to as little over 1,700. We've verified over 5 million tons to date. Every verification we do annually, is like 600 mini verifications. And because of the scale that we've been able to achieve over the last almost 18 years now, we've really kind of developed a large volume of supply, and are certainly the largest in the reforestation side in terms of credit issuance, and also one of the top 15 largest forestry. It includes RED projects. We're predominantly focused on the Mississippi River Basin. That's that big part that really covers most of the United States, but we're increasingly expanding our river system approach both into Virginia and to the Longleaf Range. The Mississippi River Basin is a flyway for 60% of all birds. It's a major commercial artery. A lot of commerce travels up and down the Mississippi River. And because of the farming and the intensive agriculture that's gone on, it's an area that Lower Miss once was 24 million acres. And through mechanization of agriculture, it's down to roughly about a little over 4 million acres. Our goal is to put 1 million acres back in that Lower Miss area, really helping to clean up the water, create those biodiversity corridors, and help support that local economy. Our landowners are like Mr. Williams here, has 33-acre property in Arkansas that's been passed down from generation to generation since the Civil War. And we're very proud that we can make carbon markets work for people that have this size of acres. And he's certainly not even our smallest. Like I said, we have 7 acres. So if we can make the carbon markets accessible to small and medium landowners, we think we can really drive scale in the end of the day. Some of our clients include Shell and Duke and Norfolk Southern, Microsoft, the Arbor Day Foundation's fantastic partner of ours, Natural Capital Partners as well. We work with a host of companies and folks looking to drive scale, and also for a lot of various reasons. But what you'll notice on the corporate side is many of these companies are publicly traded companies. About 30 to 40% of all invested capital on Wall Street socially and environmentally screened. And so as these companies are reporting their scope 1, 2, and 3 emissions, there's real consequences about how they're managing their environmental liabilities, because the environmental liabilities are becoming shareholder liabilities. And so we're working with these companies to create long-term strategies, and the carbon forestry and reforestation helps to play a significant part of that. We're also a member of the 1trilliontree.org. Late August, the U.S. chapter kicked off. There's at that time 26 different entities, about half companies, half NGOs. To date, just shy of 950 million new trees that have been pledged. Our commitment is 100 million. We've already planted over 42 million, as Mike mentioned earlier. This 100 million new trees equates to 167,000 acres over the next 10 years. So, roughly 16.7 or 16,700 acres each year for the next 10 years. Now, what's driving all this? And we're seeing a lot of talk about natural climate solutions, but even in more particular, this concept of carbon removal or climate offense. Carbon removal is simply the act of taking carbon out of the atmosphere and storing it. And it can happen in a lot of different ways. It can be engineered, it's very expensive. Or you can look to Mother Nature, whether it's ocean, soils, or forest, to really help enhance and create uplift value where you're storing carbon through restoration and vast improvements. And carbon removal is the reason for this, and why it's so important, is that if we waved a magic wand across the built environment today, all that does is lessen how we are emitting from this point forward. It does absolutely nothing to address what happens or what is already happening in our atmosphere. So if we leverage natural climate solutions and we can go in and do large scale reforestation and grasslands and coastal restoration, we can actually take the carbon that has already been put up in the atmosphere and help to heal the past. As you'll see here, carbon removal is a major part of the Paris Agreement's targets. Matter of fact, they have modeled that carbon removal needs to get to somewhere between 1 to 14 and then scaling 10 to 16 gigatons a year globally in order for us to meet our different temperature rise targets and to get to those negative emissions curves. And so getting that carbon removal designation, getting the volumes growing at the gigaton level, which is a phenomenal amount of carbon worldwide. And even in the US, they're projecting hundreds of millions of tons of carbon removal needed in order for the US to help meet its obligations if and when those obligations get cemented into the Paris Accord. Now let's look at forestry. Not all forestry is equal. Afforestation, reforestation, the way you create carbon is you got to plant and grow a forest. And does it require upfront capital? Yes, it's capital intensive with the reforestation and site prep. As we look at things in terms of climate offense and defense, we consider reforestation or any restoration very much climate offense, and therefore is definitely in the removal category. Afforestation or avoided conversion, you generate the carbon by demonstrating that there is a threat to a conversion of another use. There's not a lot of upfront capital because that forest was already created at some point in time in the past. And the best way to look at avoided conversion or RED is to think of it as like goal line defense. And so it's likely to be deemed more as a carbon reduction. Improved forest management is a little different. You have to make some management change on the land. Not a lot of capital because that forest was already up. But think of it as an attacking defense, because sometimes in these improved forest managements, there are some restoration things to kind of get it back growing. So it can be an attacking defense, and depending upon how you're making those management changes and what activities, it's likely to be a reduction, but there are some cases where it could be deemed a removal as well. Now, the challenges, and I really want to talk about this because all this is great, but we have huge challenges, and one of them is the nursery supply. While these commitments to the trees and the demand for carbon are just, awesome, especially for somebody who's been in this for almost 25 years, it's great to see this market really to the point where it is right now. The reality is there's just not enough sufficient nursery supply. And I'll give you a case in point. The best tree growing region in the United States is the Southeast. There's roughly 20 million hardwoods that is in the capacity in all the different nurseries, both public and private. At a stem count of 600 trees an acre, that's 33,000 acres of land going into reforestation a year. That simply is just not enough for the demand that's out there. And what's driving that demand is high prices, the demand for these carbon removals, and we've got landowners ready to respond, and we don't have enough nursery supply. And it's not something that you can flip a switch and quickly turn on. It takes 2 years to collect your seed source to really kind of grow out that nursery. We've been talking to the folks on the Hill. We really believe that any talk about 1 trillion trees needs to have some type of investment tax credit structure, maybe somewhat similar to how wind and solar grew over the last decade and a half using ITC credits. There's probably some other ways to do it, but we really need to gin up our nursery supply in the U.S. South. I'm not sure what the situation is out west. Mike could probably opine on that a little bit later. But here's the real challenge. Outside of some material and labor and things of that, you got to remember all biological systems go through an S-curve of growth. Think of us. We all started as infants. We hit our teenage years. We piled on height and weight and really grew, and we become adults and we kind of level off. Well, trees are the same way. and reforestation. So when you plant trees, and it takes time to plant, and one of the biggest challenges in this S-curve of growth is the fact that in these compliance markets like California, the trading or regulatory window just doesn't fit the biological window. And so there, you take a lot of regulatory uncertainty risk because you're trying to pack in the first maybe 10 years of your investment, but you really don't know after year 10 whether California is going to renew that that regulatory framework, and so you're only getting a very tiny slice of the investment, the upfront capital that you're putting in. So there's some real challenges there, but at the same time, the price curve is got a floor and how California is working, and so obviously the floor price matches as you put on more and more volume in your forest, you're getting it against a higher and higher price, and so that's obviously something that we like as well. The impact of the risk buffer is really tough in these early years of these projects, because you may only be getting 1 or 2 tons an acre a year in those first couple years. So not only do you need to really jack that growth up, but you need to have a lot of acres. And for the way we approach things, and I'm going to flip through a quick slides on this, but we try to optimize the carbon and the biomass and the conservation values, and we look at various layers of credits or assets, from the appreciating asset side to timber to carbon to hunting, et cetera. But here's how it works for us. You'll see this first line, and that's your total biomass stock that's going on. And what we end up doing is we allow different junctures of timbering or thinning that goes on in this mixed hardwood forest. That creates a diversification of revenue for the landowners. And then we look at what's the lowest point in that forest management plan, and we really bring that line forward. So we've really built a forest management and a carbon production plan that puts carbon and conservation as the senior asset on the waterfall, and the timber rights as junior to that. But in the process, it's creating this ability for the landowner to optimize. Do I want more carbon, or do I want to take my timber in my out years? And so they have that flexibility point, and it also creates a certain amount of security by creating this mechanism of kind of an asset waterfall on that land in an optimization. We've done this using an interplanting approach, where we're roughly mimicking what Mother Nature would do by herself, by compressing time and space using pioneering species and mass producing species. And so instead of having a red curve that takes forever and a day to generate carbon, we're able to really generate the same amount of carbon in the first 15 years. And that has a lot of other associated benefits. What drives the growth of these curves? It's kind of your nuts and bolts. Are you in the Mississippi Delta, which is a temperate rainforest, long growing seasons, 60 to 90 inches of rainfall a year, soil productivity? Thank you, Iowa, for all that soil you send down the Mississippi River. But things that you can control: site prep, your tree species selection, and you're matching that based upon soils, the tree density, the quality of the material going in, the plant, and then you got planting survival, which is really correlated to that quality, and also some weed control in those first early years to make sure those trees are laying their roots and off to a good start. Another challenge that I want to impress upon people, besides the growth curves and besides the supply, is the verification. The same verifiers that are verifying compliance market are verifying the voluntary market. There's 3 main ones that are out there that account for 80 to 90% of all verifications. The compliance market verification can last anywhere from 9 to 11 months on average, and voluntary about 7 to 9 months. This is after the season stops. The growing season stops. So trees predominantly grow in our neck of the woods from March into October. But this time of year, we've got now our foresters into the field. They are measuring how those trees grew year over year. and then the clock starts ticking on the verification, which means you're not going to get credit issuance until sometime in July. That is a huge transaction cost when you compound that against the growth curve, and you compound that against the upfront capital. And so you've got some real timing and transactional costs that you have to manage to be successful. And these verifications aren't cheap. They're $250,000 plus. And to overcome these barriers of entries, you need patience, and you need time, you need strong yield curves. And at the end of the day, not one of our landowners could go into the voluntary or the compliance market. They're not big enough to do it, and they don't have the ability to stomach it. And even, so what projects tend to do, and Mike's got a very large project at 10,000 acres, but even looking at that, they're not doing annual verifications. They're waiting every couple of years to do it so that there's an accumulation of carbon before they start running the clock on doing a verification, which can be quite expensive. There are a couple opportunities to how we can solve some of these things. One is looking at public-private or looking at project finance models from an offtake point. Because of the long nature of this, because it's infrastructure, 20-year offtake agreements are things that really help projects like these. And we love the longer, the better for us. We've done 15 and 20-year offtakes already. We should really be looking at building a federal carbon insurance reserve instead of taking the 20%. So we're doing about 1 million tons a year. So if we get hit with, say, a 20% buffer, that's 200,000 tons I'm putting into a buffer. At a current price, we're pushing close to $20 a metric ton. At a current price of that is $4 million of value that we're just kind of putting away into a registry reserve. I would much rather buy an insurance product, keep those tons, make the project more financeable, get more money back down into that landowner's pocket. Second option that's out there, something that we've been championing for 12 years now, and that is to take the IRS 45Q, which is a geological sequestration tax credit, expand it to biological sequestration of all types, and make it tradable and transferable like Virginia does with its land preservation tax credit. And then the final thing that would really help these projects is to get access to affordable imagery for verification. There's some great technologies out there, Pachama and what Sylvia Terra and others are doing. We need more of that in the system, and really to help lower a lot of the verification costs. But these are just some of the things that are out there. And what I want to just impress on everybody is when you think of trees, think of it as a technology. Think of it as no different than wind and solar. We need 20-year offtake agreements. You need some patience in these markets. And we need to tackle these bottlenecks so that we can really drive the carbon removal nature. We really need to unleash the power of Mother Nature, because nature is a technology, and has a role to play in helping us mitigate these challenges that we all collectively face. And with that, I'll turn it back to Lauren.
Chandler, thank you very much. Really appreciate this. Mike, really insightful presentations. Thanks so much for taking the time to prepare them and share this information with us today. We have time for a couple of questions here, and we've gotten a number of really interesting responses and requests for clarification. So one of these, I think there are some kind of basic questions of, can one or both of you clarify what happens once the credits are produced? So you're both on the producer side creating the projects, but how do they actually get to market? Who sells them, and how do people know about them? And probably clarify between the compliance and the voluntary market.
So, we work with buyers, we work with brokers that are out there. We're looking to transact all the time. Right now, where we were probably supply rich for for a while, last 2 years, we're really we can't produce this stuff fast enough. We've got buyers, and we have multiple buyers that have approached us about 800 to 1.5 million metric tons a year. Again, that's one buyer, and we're producing about 1 million metric tons of carbon a year. So if we could, our focus right now is really about how do we meet the need of the market and scale and double and triple our footprint so that we can meet these demands coming at us. But in the early years, it was tough because it was a very thin market and there wasn't that many people.
Yeah, to kind of echo on that, there's not a whole lot of people in this space. And so if you're looking to buy big volumes, it's pretty quick to find out where they need to go. But as we talked about on the slide there are quite a few brokers and retailers in the space as well. And so if you're doing a smaller project that it's not super easy to find if you're a big buyer, or maybe it's too small a scale, you can work through those third parties, and they take a percentage for that transaction, but it might be worth it as just a sales channel because they maintain those relationships.
Thanks, that's really helpful. We had a few questions also related to price and value. One was a clarification for you, Mike. It seemed like you mentioned that voluntary prices might be more competitive than compliance markets, but some folks were pointing to examples otherwise, and we were just hoping that you could clarify your thoughts on that, or what you said there.
Yeah, sure. So as far as prices go, on the voluntary market, there's huge ranges between things that are relatively easy to produce and not particularly a good marketing story, and things that are. And so a lot of people tend to go to the State of the Voluntary Carbon Market document that Forest Trends produces. And a couple things that happen there. One is that Forest Trends they're a great organization, but they are also limited by what people are willing to share with them. So it's a very opaque market in that space. And so I think a lot of their story kind of gets overwhelmed by those cheap credits. People really do spend a premium on voluntary credits, and probably our best source on voluntary American sourced reforestation credits is actually Chandler. And he can tell you what he's actually transacting, in the hundreds of thousands to millions of tons per year.
Yeah, I mean, the price points used to be below California, but what we've seen, especially as people are looking particularly for the carbon removal nature of things, that reforestation is really going at a premium, and that's for good reason. It's really different, I mean, from the other forestry types. For reforestation, you have to create the forest first before you create the carbon. With existing forests, someone else created that forest. What you're doing is either preventing it from being converted, or you're retooling how it's being managed. Vote not to diminish it, but they're just distinct differences in how much capital you have to outlay. And so they should be priced differently from that standpoint. But the carbon removal nature has really been a big driving point around reforestation in the last, I'd say, 2 years.
Yeah, thanks. That's really helpful. So with just our last 2 minutes, we do have a number of outstanding questions. So I apologize to everyone that we won't be able to get to them in our live session, but we will be following up with our speakers on a number of these. But just from each of you, could you just give us kind of a big picture overview? Where do you think your projects, the projects of the scale that you're working at, where are they headed? What are you excited about? You both mentioned some barriers, but where do you really see your work going from here?
From our standpoint, it's how do we triple the amount of acres that we have in the ground, and because we have a pathway to getting that volume to market, and we have buyers that are looking for that kind of volume, and so it's got us looking at everything from various investment structures to financeable offtake agreements to a number of different financing approaches to things. And so we're looking at all and any of the avenues, but at the same time, we're having to deal with these bottlenecks, particularly in nursery supply, because if we're going to deploy $300, $400, $500 million of capital to expand our base, then we're going to need the material to be there so that we can start the construction phase of putting these forests in the ground.
From my perspective, you know, the things that makes me most excited about our future is that one is the demographic change, which is that this is something that is increasing demand, and two is the political. In our incredibly fractured times, this is like reforestation seems to be the one thing that people seem to agree on. So that's a big deal, and that's driving market behaviors. The risks associated with not dealing with CSR are increasing, and so you're seeing big dollars coming into the marketplace, and there's just that. You know, for the challenges looking forward, which is to kind of echo what Chandler says, we need to plant a lot of acres. You know, on federal lands alone, it's 7.5 million. Like that's a huge scale. And some of that's going to have to probably be a little bit of government, but a lot of that's going to have to be private market participants. And so I'm excited to see where that relationship with the U.S. Forest Service could go. And I'm excited to see as the carbon markets kind of spread out into smaller landowners as well.
Really insightful comments. Thank you so much. And so with that, we'll kind of close up our session today. Big thank you to both Mike and Chandler. Again, really appreciate the time you put into the presentations, preparing, sharing your knowledge and expertise with us today. And for everyone else, thanks so much for joining. Again, the webinar is recorded. We'll be posting all materials to our website within a couple of days. Reach out to us at forestsc@msu.edu if you'd like to join our email list. And again, thanks everyone for the time, and we'll see you all at the next session. You'll see coming up here in December, on December 2nd, we'll have Dylan Jenkins sharing some more information about project-based work. So we'll see you all in about a month. Thanks. Take care.
Thank you.